Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Wednesday, July the 27th, 2011. Well, a continuation of the trend to the downside today. We have a candle that's made a lower high and a lower low. Yesterday's trading we had a red-bodied candle that just closed below the support at 1332. We had a small shadow on the bottom of that candle which represented a loss of commitment by the sellers as the market tested down below that area. It didn't seem to be too significant that the market had closed down below there, but certainly the bears have followed through today in a very strong way. The bears have been so committed that they've taken out 1, 2, 3, 4 levels of support, so a very, very large sized downside momentum day today. Very bearish candle, sellers in control, sellers showing very strong commitment to taking this market lower. Now we should be looking to support around this 1300 level, and as we've seen on quite a few occasions previously, that round number 1300 is a strong area of support and resistance. So it's a very important level for this market. But we do need to consider that we do have strong support down below there at the cloud. And the cloud does extend down to roughly about 1290 to the bottom of the cloud. So we could expect the market to hold up anywhere within this region. We also have this area that we've highlighted in yellow previously where we saw the market find support, and it was an area of previous resistance and a very large area. And that's because of these shadows on the tops of these candles where we saw downside price rejection within this large zone. So we could expect the market to find support anywhere down to roughly 1287. If the market does trade down through there, then we have a minor support level at 1275 and a couple of major ones at 1265 and down to the swing low at 1258. So some good solid support down below, but certainly this round number 1300 is much more important than any other support level that the market will be testing. So an important level, and then next important is probably at the bottom of the cloud. Now, in Ichimoku charts terms, the market is trading within the cloud, so we have had a major change in overall sentiment in the market. The market was previously bullish by trading up above the cloud, now a neutral market, so that's quite important. The market is also trading below the Kijun-sen and Tenkan-sen, so we have a bearish market in the medium-term and fast-term timeframes. And the Kijun-sen here, the pink line, has failed to hold a support, so that's quite significant. We did mention yesterday that the Kijun-sen had turned flat, and for the previous 2 days we saw the market retracing back towards there, and certainly today the market has gone on with that. We suggested that there was a possibility that the market would continue to test down to lower levels because of that flat Kijun-sen. Very high probability of the market retracing back towards a flat Kijun-sen. So basically for tomorrow's trading, around the low of the current candle is very important. If we do see solid bearishness early in the day and we test down below 1300, well, we could expect to see lower levels and look to support down around the 1290 region. To the upside, we have some strong resistance at 1313 and at the top of the cloud, so that will hold as a strong resistance level. If we see a bullish breakout up above there, then we could see the market trade up to resistance around 1324, but we shouldn't be preempting this market. It's a very, very bearish candle that we're seeing. Quite often, though, when we do see these large bearish candles, the market does need to take a rest, so it wouldn't surprise to see a market that doesn't make any similar progress, much smaller progress, and I'd say that there's probably a very good likelihood that this 1300 area will hold. The market may test below there, but it may not close below there, so a very important level for tomorrow's trading.